Welcome back to Hard Money. Joining me now is Caitlin Long, Bitcoiner of 10 years, Wall Streeter of 22 years, and CEO of Custodia Bank for the last 2.5 years. Caitlin, thank you so much for joining us.
Great to be back. Thank you.
Well, Caitlin, we started the week with a lot of panic in the markets, Bitcoin dipping below $20,000, but the macro picture looks even uglier to me. Give us your 30,000-foot view of what you're seeing, or what does it look like from the top of the Tetons over there?
Well, it definitely looks uncertain after Chairman Powell's speech in my home state of Wyoming last week. And Europe is really ground zero for all of that. The spike in electricity prices, 25% in one day, 50% in 1 week, that is staggering. And it's going to be rippling through the entire economy of the world. And boy, do I have a lot of fear as to the impact of that on Europe in the upcoming winter, for sure.
Well, here in the US, we're seeing so many indicators of recession. Home sales are falling off a cliff. And meanwhile, the Fed keeps gobbling up mortgage-backed securities. I mean, they haven't really even stepped up QT yet, right? So how do you see this playing out?
Well, I always watch liquidity in the Eurodollar market because that's the canary in the proverbial coal mine in financial services. And there are all kinds of warning signs that we are in the fifth so-called Eurodollar event since the 2008 financial crisis. And that does suggest that we're in for a choppy fall in financial markets. Now, that said, I don't make forecasts. And I look at Bitcoin, which has, of course, increased its correlation with risk assets in the last few years as all the Wall Street hedge funds came in and started trading it like a financial asset. It will not always trade that way. And it will go back to what it was and the way it traded before it became financialized. And I do believe that if you put yourselves in the shoes of someone in Europe whose inflation rate just spiked because of the energy cost, the cost to heat homes and buy gas or petrol, as it may be called in those countries, it's pretty clear that Bitcoin is outperforming spectacularly relative to their own home currency. It's just that a lot of the discussion of the value of Bitcoin tends to be against the US dollar. And that's where it hasn't moved much since the big correction. And it does seem to be holding in there relatively well. But as you and I've talked about before, price is the least interesting aspect of Bitcoin in my mind.
That's right. One Bitcoin equals one Bitcoin. Well, Caitlin, with all your experience on Wall Street, many analysts, especially Bitcoiners, have said that the result of, the over financialization of the economy for decades is why we have these debt bubbles, propped up by easy money. Can you simplify what the financialization of the economy really means for someone that has no financial investing background?
Well, it means that the denominator of every price is floating. And it's actually going down. So if you think back to your 8th grade algebra, think about a fraction. As the denominator goes down, the value of that fraction goes up and vice versa. And so what's happening is as the dollar's value is going down, your purchasing power is being reduced. They're making more dollars and it's not turning into as stable a store of value as it used to be. We've seen it in the consumer price inflation rate. And of course, in producer prices as well.
Well, bear markets are great for building, and I know you've been working on building your bank and helping make sure policymakers and also institutions understand Bitcoin. So I wanted to ask you, what are you most excited about during this time? What makes you really bullish on Bitcoin right now?
Well, this is when the real building gets done. And I'm so bullish on the layer 2 levels that are being built right now to scale Bitcoin, in particular, the Lightning Network. It's still early days. But Bitcoin itself has turned into what all monetary systems that became true money became, which is the base money, and then it scales with layered money. So if you studied economics, you might think about M0 as the base money that's issued by the Federal Reserve, and then M1, M2, M3 are issued by financial institutions in the private sector and multiplied. There's so-called money multiplier. And the same thing is evolving in Bitcoin. Bitcoin is becoming the base money, which is the high value transfer system. You don't buy a cup of coffee with it, but you build a scaling layer on top of it, which is the Lightning Network, and you do buy a cup of coffee with Lightning. And I just saw today, there was a story about a Lightning transaction, an invoice being sent for a small value over ham radio. I've seen Bitcoin transactions done over ham radio before. It's all part of the engineers working on the resiliency of this network, that if the internet ever really did go down, you'd still see There are nodes running on Bitcoin on satellites, rather. And now there's ham radio. It's certainly not as fast as a typical internet transaction, but it's the way the engineers have been thinking about resiliency for Bitcoin. And all of that really matters. That's part of the reason why I do believe it will retain its value in extreme situations.
That's a great point. And I know a lot of people are excited about the Lightning Accelerator from Ross Stevens that was announced last week as well. A couple of last things, Caitlin. I know you've been in talks about the financialization of Bitcoin. You know, the idea of whether a system of credit will actually exist on the Bitcoin standard has been debated, but I believe you said that the borrowing cost of Bitcoin would be astronomical because true value of holding the asset with zero default risk would be massively high. Can you kind of explain what that means and break that down?
Well, the Wall Street financialization games that the hedge funds brought to this industry beginning in 2017 aren't going to survive. They've definitely kicked around the secondary market price of Bitcoin. By the way, I don't really care that much about that per se, because the underlying base protocol doesn't care about its secondary market. But what it ultimately means, very simply, is that Bitcoin and leverage don't mix, period, ever. Anyone who leverages Bitcoin is at risk of losing it. And it may not be possible to buy it back if you do lose it. And so those that are searching for yield on Bitcoin are taking what we've learned through the May-June timeframe in 2022, is if you're searching for yield on Bitcoin, the counterparty risk that you're taking on might be far greater than the yield that you're earning. And it's just not worth it. And the reason is because there's no lender of last resort for Bitcoin. So unlike with other financial assets, there's a clearinghouse or there's a central bank or there's somebody to do a bailout in the event that your counterparty fails. But in Bitcoin, there's not. And I think that's a feature, not a flaw.
Yeah, absolutely. Well, anything else that you want us to know that you're maybe monitoring with the price drop recently this week? I know a lot of people have been worried that a bigger crash is coming. What else do you want us to know, Caitlin?
I don't know if a bigger crash is coming or not. All I'll say is this is my third crypto winter, and I survived the first one without, with underwater Bitcoin for a couple years there. And it's not comfortable, especially if you've put a lot of money into it. But what I've learned is that Bitcoin goes through very clear 4-year cycles. And there's a good reason for that, because the inflation rate of Bitcoin is cut in half every 4 years. And it does trade like a commodity. And the stock to flow ratio of Bitcoin is very high. There's very little of it produced every year. And that means its inflation rate is so low. And as a result of that, just holding on to your Bitcoin, generally speaking, over time, you're going to come out ahead. And so I would encourage folks in the bear market, in the crypto winter, to spend time teaching yourself. There's no better investment than in your own learning and your own understanding of how Bitcoin works. And that will help get you through tough times, especially if you are sitting with losses underwater. I've been there. I'm not afraid to say I lost money in the Mt. Gox collapse. So I had to learn the lesson the hard way of knowing that your counterparties might not be as secure as you think they are, and teaching yourself how to self-custody your Bitcoin is one of the best investments that you can make in yourself and in your Bitcoin and in your financial future.
We hope you enjoyed that interview. Make sure that you like and subscribe so that you don't miss out on any hard money content.